All right. So now, right now, we're looking at Bitcoin. So the first thing is just since you've been trading about 3 years.
Yeah, about.
Okay. So then what's your so what do you do like when you're trading? So what are the like you see a trade like how do you decide? Okay, I'm long. Okay, here's my entry. Are you using like an Elliott wave theory, uh,
I was
Fibonacci's?
actually using the Nadareo Watson envelopes, and I'd put four of them on the screen. And then I would if it'd be 20, and the multiplier would be for one set one, then the next one would be two, and three and four. That would make like a cloud almost like you see on I don't know if you ever
Oh,
Xalgo.
so the what's that? The Amici clouds. So
Yeah,
what's
it would
the
kind of make like a zone.
okay? Let me pull that up. What's the theory called?
It's not a theory, just the indicator I was using was a Nadareo Watson envelopes.
And that's on TradingView.
That's on TradingView. Yeah,
Hold on, let me see this.
I could spell it for you.
Yeah, let me. I was gonna Google it, but see if there's a theory on it. Okay, let me pull up indicator. Okay, go ahead and spell it for me.
It's Nadaraya.
So M is in Mary.
Oh, I'm sorry. It's an N,
All right, N.
not an M. Yeah,
Okay,
there it is. Looks good.
let's go.
I
And
think
you're
the
using the
first one
envelope,
there.
right? Yeah. Okay. Okay. Let me see what it does here. One second. Okay. So it puts in the
So
tips.
I would actually put four of those on my screen.
Oh, and then you adjust the settings.
Right.
Okay, so then you would be in here adjusting the bandwidth, this areas that are
Yeah.
okay. Oh, interesting, interesting. Okay, so the ideal behind it was because I see there's a cloud trail here. So what would be that? What is it that triggers it for you? How would you put those in there?
It's hard to explain. Is there any way I can like share my screen with you?
Yeah, 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 yeah. So all you do is go to
I have a
your yeah in Discord. You'll see down in the party. If you go down, you'll see where you'll be able to you see
live
like
chat.
yeah no in the same video that we're in. It's just when you go
Oh, I got
down,
you.
yeah, you'll see your name, and then to the right of
Mad
it, you'll
Max.
see screens and the one that looks like a yeah. You should be able to share your screen there. Let me see. Okay. So if you look down,
I
it says
do.
video connected. There'll be a section that says kind of like turn on camera. The next one is share your screen, start an activity. Are
Oh,
you on a
okay. Shoot.
Are you on a PC?
Yes.
Okay. So if you
Should be
just
coming
just
up.
look at the left side, look all the way at the bottom.
Oh, damn it. I just went up. Just said failed to start. I'm trying it again.
And if you can't, that's fine. So what was the overall like? Oh, there you go. There you go. Okay, let me jump out here. Cancel this. All right, watch
Can you
stream.
see it?
Yeah, I'm pulling it up right now. All right. All right, there we go. Okay.
I mean, it definitely wasn't like the best.
So what was the?
In fact,
What are you going off of here? Like, what are you picking?
can you see my mouse?
Mm-hmm. Yeah.
See when it hit down. This is the guy who's like explaining anyway. When it came down to like the green band
Mm-hmm.
and definitely the yellow, you would definitely buy right around there. And then up top, the green and the yellow, those were that's the sell when it hits up there. And
So
then anything in the middle, like
what he okay? So what he was doing was he was at. So you how many of these you put on the page? 4.
yeah, yeah, one, two, yeah, four.
And then you would adjust the settings on those.
Yeah, the bandwidth was
Mm-hmm.
20 for all of them. Then the multiplier would be one, two, three, and four.
And then the fourth one would be your buys, and the ones would be your sells.
Right.
Okay, okay, okay. All right. I've never seen that before, but it's interesting. All right, let me kind of like. Well, I mean, how is it? Okay, so yet I have to like see that in like. I would have to test that to see how it works
Yeah, I
in
mean,
person. All right, let me jump in here. Okay, so we're gonna simplify it a little bit. I kind of like.
I'm willing to forget all this shit, you know?
Yeah, well, that's fine. I mean, the
Strategy.
basics are like, coming down to the basics is just understanding that there's market makers, right? The people that control pretty much the big buys, the whales. You know, they're setting up for certain positions, and they're playing, just an average normal gain of 20 to 30%. And they set up and test the 1, 2, 3, right? So they know everything that you're going to be looking for. So most people, it's like no matter what theory you're using, if you're in Elliott waves, if you're most people look for a breakout and then a retest. Um, so it's always about coming back down to support and then bouncing with support and then kind of like going after either previous resistance or etc. Right? So there's always like a 1, 2, 3 move. Okay. So when you see these dumps and as they go down, the only thing that really matters is value, right? When the money comes in, right? Because that's the only thing that makes it go up. It's the only thing that makes it go down. So once you kind of understand the basis of, what you're looking at or what you're playing, that's all that really matters. And then the next thing is just understanding what the masses are doing, right? Because even though the smaller numbers are the market makers, they control heavy amounts of capital, but they are also, the decisions they make are based on what the retail or the sentiment. Like you hear people say, "Oh, the sentiment of this trade," right? Which simply just means whether people are buying or selling, right? The sentiment. It's
Right.
just how people
Yeah.
feel about it. So that is all based on, at the end of the day, if they like it, they buy. If they don't, they don't. Sometimes they can like it and want to buy it, but they just don't have enough money to move the market to where the money makers will look at that and go, well, there's not enough volume here. So what they have to do is they may have to make a fair market price. So sometimes you hear people talk about fair market gaps, right? And normally that's where
Yeah.
a price exploded from a place. That's just because at that point, it's just where most people thought that price for whatever we were buying was a good price at that time. And then the market makers put so much money in at that time that it just created a gap. Because that's where they were setting up, deciding that that was the fair price for the market. And that's why you see that explosion and you get that gap.
Right.
So when you understand, it's like, you're trading with the masses because you need to trade with the common retail. But you also have to understand how the market makers are deciding where something makes sense and where and why they'll be there. because this will help you understand, like, as you start to see the Elliott waves or the 1, 2, 3s, playing a simple game of up and down and percentages. It's all mathematics. You'll start to understand why things don't keep going, why things pull back, etc. Right? And really, really basic stuff. So here, kind of just using Bitcoin as an example for what we're looking for is just basic moves, right? Now, what time frame do you normally trade on?
I usually use leverage, so I would say 5, 10. I mean, 5, 10, 15.
Oh, 5, 10, 15 minute?
Yeah.
And what's your... What
And
do
then, I
you,
mean, I look at the higher time frames.
okay. So what is your... So what's the leverage that you normally use?
I usually use 20,
Okay, that's not bad.
which is,
Yeah, that's right where you want to be.
yeah.
Not too low, not too high. Um, so we normally recommend 20, just because when you're first starting off, it allows you to, because the goal is to very simple to get to a spot where, you can make a 20% trade, close out with a 15% marker, and if you got 10% out of that trade and on a $3,000 trade, it's $300 after fees and everything.
Right.
So if you can knock out, a couple of those a week, you can easily get yourself up to 1,500 to 3,000 a week, which is $100,000 a year. Very low stress, very simple to do. So we train and teach strategies that average 20 to 60%, so that at the end of the day, if you're running, or so basically a 1 to 1.5% move. So if you're doing a 20x, that's going to be a 20 to 35 to 40% move, possibly 40. So to get 15 out of it should be relatively easy. Now, the hardest part of this is understanding the concepts of being greedy, where most people want to be greedy where they hold it and hope it runs, and now you're just playing against the odds, right? It's harder to predict how much money can go into something. It's easier to know that how much money will come out of something, right? Because once it's exhausted and the people made their money, they're going to take profits. So I short heavier and use bigger numbers on shorts, because it's easier to understand that, once they've hit profits, they got to take them. And then once people start selling, it's easier to get paper hands. So in the other effect, when you're going long, you have to be greedy on entries, because that's going to be where you make your money, right? If you enter a certain level. So the one thing I want you to do is called a 10 trade review. It's real simple. When you enter a trade, following the steps that you're doing, whatever it is, you enter, and you're going to mark down literally 3 things. The first thing is, how much does it go back, like percent wise? Does it go back 0.5%, 1%, 1.5%, whatever it is? And if you're using a 20x, if it goes back 20%, that means it went back 1%. You know what I'm saying?
Yeah.
So if you're using the same leverage every time, then you could just write percentage and say, oh, it went back 27%. And then the next thing you're going to write is the highest it went. It went up to 27%. So it pulled back to 26 or 24, and it went up to 27, and then it kind of pulled back, and you closed out at 20, right? And when you keep these, when you keep these records, you can look and go, okay, let me see my last 10 trades. If your average pullback is 22%, and you're doing a 20x leverage, that means you're about a 1%. You're off by 1%. You're entering 1% too early. See what I'm saying?
Yeah.
Because if it pulled back to 24%, that means that it went more than 1% backwards with a 20x leverage. So theoretically, if you're averaging...
And you would backtest this for one coin?
I mean...
You would backtest this for one certain coin?
No, I mean, you don't have to pick one coin. You can do any coin you want, because you should be following the same steps. But I mean, a lot of people like to trade 1 or 2 coins because they start to see their patterns. But this really doesn't come down to that, because That's more like you starting to see where, like, a pattern of Ethereum, which will be a pattern as long as the people that you're trading with are the same people that are buying and selling, right? So a lot of people like to trade Ethereum because it's not as big as Bitcoin, but it does have a lot of traders in it. So it's a lot easier to see the predictable patterns that they like to run because they're basically the one, two, threes and all that. There's more people in them. So even if it's a slower day, you have more people trading it. See what I'm saying? So it all depends on how you want to look at patterns. I mean, to me, if you're setting up a system, whether it's okay, I wait for the 1 hour to head up. So, like, okay, for instance, here's a strategy for us. The 2 hour RSI is heading up. The 4 hour RSI is heading up. When the 4 hour breaks the 20 line, right? We then, as long as the 2 hours headed up, right? We then go to our 10 minute, and as soon as the 10 minute bottoms and starts to head back up, then we enter, right? If the 4 hour is heading up and the 2 hour is heading down still, we wait for the 2 hour to turn up, and when they're both heading up, then we go back to the 10 minute again, and we allow the 10 minute to come down, and when it bounces back up, that's our entry. You see what I'm saying? So those are steps, right? Step is 4 hour going up past the 20 line. 2 hour heading up. Once those two steps are in, the entry is simply let the 10 minute reset one time and then enter, right? So I'll show you, like, here on Bitcoin what I mean. So let's say that our very first thing is just to make sure the 1 hour is heading in the right direction. And this is just using the RSI, right? So you can see here, the 1 hour starts to head up here. And normally it's gonna, you're not gonna see it, you're gonna see the next candle. So when it heads up, just go to the next candle. So here's one point that it goes up. Here's another point where the 4 hour heads up. Right, I'm gonna put these two.
I've done the box thing.
Yeah.
In your videos.
I'm just gonna put these in here. So we know these are the 4 hours. Now, once the 4 hours heading up, we slide down to the 2 hour, right? Because we want to trade with the 2 hour. So here we can see that in these cases, the 2 hours already headed up on this one, and the 2 hours headed up on this one. So both these qualify as a trade. So now the next thing we would do here, I'm just going to pull this up. I'm just going to pull this down. And now I'm going to slide over to the 10 minute. So all that would happen here is that once we have those clarifications of the trade that we're looking for.
I think you're on the 3 minute right now.
Yeah, I'm gonna rotate down. Yeah, the 10 minutes. See if I can find these bad boys. All right, so here, that's one, and there's the other. Okay, so what we would do here is once we see this happen, right, we'd slide into this section here, and you see how the 10 minute is up here. We'd want the 10 minute to reset, right, which is pull down. Now as it pulls down, you see you have it's blue, and we would wait for it to pull down, and what we're looking for here is positive value. So in this scenario, we're below the negative line, so we would be thinking like, okay, this doesn't have positive volume yet. A lot of times we want to see the volume break above, come down, and go up, right? And that's really what we're trading on, is that once the volume is above the zero line, you know, the zero line right here between the top and the bottom of the moon indicator. You see what I'm saying? You see that on my screen? Right there. I can't hear you. Okay, yeah. So you have the zero line right there. So in this scenario, while we're waiting for the 10-minute to reset on the RSI, we notice that it goes into a blue moon. So we can't make that trade because the volume's low. And as it goes down, we see we're below the zero line. So we would actually wait for this out, until it cracks the positive value, which starts to happen again over here. Then what it'll be is that once it cracks a little bit, it doesn't hold, it actually falls back down. When it comes back around and it breaks above it, and then it retests right there, that is where we would pick up our entry. So this trade would be entered right here.
Retest 0 line.
Yeah, because we want to have value. So then we would be entering off of that. So once we have the other things going our direction, as long as they continue to stay that way, then we just look for the outburst of it finishing its process. So that would be our entry right here. Because now the 10-minute popped above, it hit the 1-2 move, it broke above, it came down, it retested, and now it's going up. So this is the trade that we would be making right here. And this is simply because the first two things that we needed was the 4-hour up, the 2-hour with it, the 10-minute reset. When the 10-minute went to reset, it went to a blue moon. Now that we have the basis of the what trade are we doing? We're doing a 4-hour, 2-hour up. Part 2 of the trade is confirmation of value because we're doing a long. So we'd be waiting for the 10-minute to reset. As we're waiting, the volume goes low, which means that the sentiment is low on it. So as it starts to pull down, we're waiting for the confirmation of the entry, which is simply the volume coming back, which is the break on the 10-minute above the positive, the pullback to the retest, and then buying that retest, which would be right here at 95,222. And then that's the trade, right? Because the 2 and the 4 already confirmed the trade. Now we're confirming the entry with the volume confirming the entry point. Now when we measure this, we can see we get a 0.39 move there, right? Now if you're doing a 20x, this is going to be around 12, 13%, right? And this is where when you see this, you have to say, okay, I'm not getting the big move that we wanted here. So a lot of times that's why we don't trade really Bitcoin. It's such a big coin, it has to have so much movement to it. But in a different coin here, let's say something like Doge that works with Bitcoin, you will get a different result. So for instance, if we look at this trade, this entry of this trade was set up on the 17th at 7 o'clock. So now if we slide over to Doge, let me grab a marker. 17th, 7 o'clock. All right. So now when we look over here, we're getting that same trade here because it's going to react to, I'm just going to move this to 7 right there. And now on Doge, because it has a different price on there, you can see here we got 1.59%.
Yeah, big difference.
Yeah, yeah. So now if we're doing a 20x, we've hit 35% on that. So Doge is what you trade if you want to trade Bitcoin. That's why we chart Bitcoin and then trade Doge. Now, yeah, that's the 17th. I'll double check. Boop, boop. Yeah, 17th, 7 a.m. You catch this entry, and then boom, you catch that long. And it's the same scenario if you're in Doge and you're watching your movement. It's the input. It's trading Bitcoin and then entering your Doge puts you in the scenario where you're just trading into your using Doge as your smaller entity for Bitcoin. So that right there would give you that minimum 1.6. And remember, you're doing 20x. So here you just need a 1% move, which you get. So that's why a $3,000 bag, 20% move, that's a $600 trade. So that's the basis of like understanding um, a strategy, right? So when you repeat the strategy, you know, you would then write down how far it went down, right? It went down negative. Let's say it went to here. You would just write down your negative down there. It'd be like 0.58. So if you had a 20x leverage, that'd be like 30%. And then, you know, if it went up, how far it went up, right? And then you just mark it down. Now, a lot of times I just put percentages because that way I know I can come back and I can do like leverages, right? So if this pulled back 0.54 and my high was 1.7, right? And I get that based on 10 trades. Now I can look at those 10 trades and it also allows me to decide on my leverage, right? Because let's say I'm doing a 20x and I'm pulling back 1.5, which is 35%. That means I need to, if I'm pulling back that 1.5%, I need to go ahead and say, okay, I got to take my entry on average. So if my entry is averaging a 0.5 pullback, right, then I can just say to myself, like, when I decide whatever steps I'm doing and I look around and some reason I'm thinking this is my entry up here, I can just mark my entry and go, you know what, I need to pull back to a 0.4, and then I would just go bloop, and that's where I would put my entry point right there.
Okay.
Because I know the system that I'm currently using is showing me that 6 out of 10. And even if it's half, so listen, understand the mathematics here. So let's say that out of 10 trades, you see that you pull back an average of a 5.3%, right? So you decide that you're going to go ahead and put however you came to the moment that you think you're entering, whether it's the support side or whatever you're putting in there. Then what you do is you just add a 0.4 in there, and that's your first starting point. So that way, your concept that you're doing, you're already adjusting for the pullback. So in reality, you're already giving yourself, if it does hit, you're giving yourself a 0.4 gain, which if you're using a 20x leverage, that's already 12%. See what I'm saying?
Yeah, I got you.
Now, most people look at that because they'll do it and they'll say, oh, but I didn't get into 5 trades, right? And most people only look at what they miss, not what they're getting. So when you do that, the reality is that they don't realize that the 5 of the trades that they got into went back 0.6, which ended up being, 25 to 30% negative. Which, if you have a stop loss, the game is to lose less, win more, right? You don't want to be losing, 30% stop losses on, let's say we have $3,000, right? Like, we don't want to be giving back $900 on a trade. You see what I'm saying? We want to protect that pocket, and we want to get greedy. So if you have 3 trades that pull back 0.5.5, which you would have got stopped out of, right? Those trades are equivalent to basically, because you're losing 30% on those. So in reality, that's like, those are almost like you have to win 4 trades. So avoiding those 3 trades, being greedy, when you do hit the 5 trades that actually hit, you have already increased your odds of winning, because that pullback, just going back to where your normal entry would have been, is going to give you 10 to 15% win already. And then it takes a small jump to get to 20. So it's improving your odds tremendously. And then those who from there can run even further. You see what I'm saying? So by avoiding those, bad entries, you're increasing your odds of winning. So now when you do get in those 5 trades, there might have been 10 trades that you would have got into, but you set up to where only 5 of them got hit, but 4 of those 5 will win. You're probably going to win 5 out of 5, but those are going to hit. Because the steps that you're following is giving you a 20 to 40% trade, and then if you knock that down and you take it to where you get even greedier, the ones that do hit are going to give you your win a lot easier. That makes sense?
Yeah, I'm following.
So a lot of times, the first thing you want to do is start, getting greedy on your entry so that you win more and eliminate losses. That's the key, right? And that there's a couple different ways to set that up when you see something, pull up, is to pull back to the greedier support, wait for the steps to fall into place, and then, play off of that. So that's the first thing that most people don't do, is when they get to their entry points, they're not getting greedy on the entry, right? They're just like, oh, this is happening, and then they get in. Instead of going, oh, here's an entry, this is supposed to happen. Okay, let my 10-minute reset, let it go positive, right? And then pick the lowest support that just happened. Like, go to get that. Because you'll notice that once you see the 10 trades, if you're watching 10 trades and you're like, man, here's my 10 trades. I averaged a pullback of 27 to 30% pullback. And which means you have to, so when you first start off, you want to start off with like something like $200 or something. And then your stop loss, you put it at 40. And you watch your pullbacks happen. And you say, okay, I'm pulling back 36%, 27%, 32%. Now you know that, oh, my entries are terrible. And you start adjusting, If you start off and you see your pullbacks are above 25% right away, go ahead and just, whatever your entry is going to be, go ahead and add 0.5%. And just start, okay, I'm gonna go ahead and just protect my money right now, and then start working from that point on. And then, okay, let me restart my 10. All right, now my pullback's only 20, 15, 20, 15, 20, 25, 50. Okay, I'm getting close to what, makes sense. And then you can, adjust to that. And then once you got that adjusted, now you're in a place where, okay, you don't have to hit every trade that you think is going to happen. You just need to hit, you just need to be where it's like, and then when you see the trades that take off, reevaluate them and go, how far could I have pulled back from where I wanted to enter? And then kind of calculate that in there. I'm like, all right. And then you'll start to find a happy medium with being greedy on your entry. If that one trade that took off doesn't really pull back, then that's just an anomaly that people started buying crazy at one point. But if you look at the other 9 trades out of the 10 and they all pulled back, then don't worry about that one you missed. That was just a moment that people bought when it was unexpected. You see what I'm saying? But if you have 3 or 4 trades that almost hit and they were like, oh, slightly above, and you're like, oh, I could have got into 3 really good trades, 3 or more, then adjust to those a little bit. But if it's not 3 or more, then don't even worry about it. And that's how you build your happy medium of entries.
Okay.
So that's the first thing I just need you to do, is start off with, okay, how am I entering, right? So go watch the video that we just put out, and that'll explain to you how we enter. Remember, everything moves in 3s. So there's going to be a push, a second push, and a blow off top. 3s. This is where you get double tops and triple tops, right? And then walk through the entry that we literally just went over. The 2 to 4, the RSI is in the right direction. The 10-minute resets goes. If it's negative, you wait. When it goes positive and retest, that's your entry point, and then go from there. So implement that as your new system of getting in trades, and then the first trade, see how much it pulls back for you, and then start using the supports. And that's in the video that I just put in there on how to pick the supports. All right, brother.
All right, sounds good. So, you think I should just stick with Doge for now? Just,
Yeah. I mean, because mostly that's what
Or
I'm
just-
trading anyways. You know, so you can chart Bitcoin and then get into Doge. So chart Bitcoin
All right,
to kind of
sounds
see
good.
where it's going, and then Doge will basically respond to it. And that'll give you a
Yeah.
little time because Bitcoin reacts first and then Doge follows. All right, so I'm going to save this
Okay.
for you, put this video in there, I'm going to send it to you, and put in the inside the Discord as well. But this is the first step is fixing entries. Right? Learning to don't worry about trades you didn't get into, but getting into the trades that you have, but at the best possible, entry point, so that the wins are easier to get, and you're not, you can start finding your leverage, finding your stop losses, and eliminating the big pullback ones, and just taking the ones that you have slight pullbacks in those type areas, because you just want to save the money from being lost without an opportunity. So entries are the first thing we got to work on.
Got ya.
Make sense?